there's this thing called the U curve inverting, which is actually a recession indicator.
If you notice that even when it recovered, it have not broken out new higher. So what it tells me is now the rally is more broad-based. Okay, so rather than focusing on AI and very tech-heavy, the market, the rally has spread out a bit more. Hi everyone, welcome to our SMT podcast again. Today is our episode 5. Today, Royston is on ICT in camp, so we only have Gerald here today with us. We got some interesting topic that we want to talk about. Okay, hi Gerald. Okay, since a long time since we've done our podcast, right? Okay, so let's review through what are the stocks that we covered previously, and then after that we can review those stocks first, and then later part we can talk about some of the ongoing topics that are happening right now also. Okay, so what are the stocks that we talked about previously in our previous podcast?
So I believe we got mentioned a few stocks previously. We talked about Nvidia, Tesla, Robinhood, and Coinbase. From what I remember in the
so
previous
these are the stocks
episodes
that we talk about. Okay, let's take a look at them. Okay, see what's happening to them. What should we do? Should we be holding? Should we be buying? Or should we be selling those stocks? Okay, maybe I just share my screen. This first time I'm using this tool. Okay, so this for the first one is Nvidia. I still remember when we talk about Nvidia, you say, "Hey, don't buy already." All the time it's like, when was that?
I think it was about 1 or 2 months ago, somewhere in July, where we said
So somewhere in July, the market has came down. Okay, market has came down, but back to the price around the same price, but market has came off lah. Okay, in terms of the stock Nvidia. Okay, so short term, maybe if you could have traded in over here using traders GPS, you traded in over here and got out over here. So and then after you got out already, you lock in already profit about 28%, lock in 28% already, and then let it come down first. Because when it comes down, you don't know whether it's going to go down further, it's going to go up, and then re-enter again back at $6 around the same price. Because there will be a situation where it does not go up and it goes down further, at least you lock in that 28%. Okay, this is for short-term trade now. Okay, that means like 3 months kind of time frame. Okay. Then for weekly charts remain blue color. So weekly chart is still up, no exit yet. Okay, the previous entry was somewhere in December 2022, and then till date we are still holding up with a 670% returns for Nvidia. Okay, so yeah, this is the trend for Nvidia. Anything to add, Gerald?
I think right now Nvidia also has this first signal, or is going to have this first signal for Trader GPS soon. So like we said earlier, since we exited already, we have profit. Then if there's a new signal now, then we'll probably enter again, and then we have locked in some profit. So I would say the trade looks better now, because in a way, how do I put it? Stock market is a bit like, breathing, or it needs to breathe. Every time it breathes in, when it goes up 30%, 100%, it also needs to breathe out a bit, cools down, and I'll say the entry now will be better than, entering or FOMOing into the top maybe 1-2 months ago where everyone was talking about it. I would say having a trade now is better than, trying to catch the top or FOMO in 1 to 2 months ago, which is what's showing on the charts right now as well.
Yes, I agree with Gerald. I think right now it's a better entry. Maybe like 1 week ago it's a better entry around here. It's not a very confirmed signal, but nevertheless, on our GPS there is a buy signal, no teeth. Okay, but TOP there is a buy signal also.
Correct.
So maybe a trade, I would say. Maybe a trade for Nvidia.
Maybe a trade, usually 1 to 3 months for TOP, then
correct.
3 to 6 months for
correct. Yeah.
Position.
And then market also is not. Market is back up again, but it's not that fantastic lah. Maybe we'll go through the rest of the stocks already. We go one or two more stocks. I don't think should go through everyone. Go one or two more stocks, and then we can talk about the market and then about today's topic also. Okay. What is the next stock that we talk about?
Actually, so from what I remember
Ah,
also, so
ah,
previously we talked about this one, or Royston talked about Teradyne as well. So I believe that one exited as well, and actually,
Paradigm. What's the
yeah,
code?
TER. So I believe
TER.
in
Okay.
previous episode we did mention
Okay.
about it.
Okay.
Yeah. So
Okay.
for this one, we
Okay.
entered since I believe 29 April, and then
Okay.
same thing as before, we have
Okay.
exited already.
Okay, yeah. So the exit lah. Okay, that's exit. I think the exit for the HBS is 1 day before the drop lah.
Yeah,
This is
correct.
the before the big drop lah. So you enter somewhere here, April, and then you exit over here. And then that's one of the reason why you should trade lah, rather than you wait for it to go back up again or things like that. No, of course you could also have a longer term horizon. Then you change to a weekly chart. Then you can see weekly chart what to do. Maybe weekly chart don't need to do anything right now. So that will be for Teradyne. Okay. Any other stocks that we talk about? One more
We
maybe.
also talked about, I believe, Coinbase and Wood. So this one was in
Okay.
the earlier episodes. So this
Okay.
one also exited already.
Okay. Okay. So Hood long term still up. That means long term is there's the buy signal here, still up about 70-80%. For trading in and out. Okay, of course should go in and out. Then you could have locked in your profit over here lah when the candle appear here. I think it's important to take profit lah, because sometimes people say don't take profit, just write long term. But it's good to take profit already. Then look for it again whether there is a better entry at the lower price later. So that's my view lah. How I can trade it, and you can see there's a number of trading opportunity over here. Like here there's some 28%, and here also there's some returns over here that you can lock in your profits. I think the bottom line is like that. It is not, trade GPS is not 100%. That means there are times when that's
That's
wrong.
correct.
Okay. But the key is you need to have a system. You need to have a method of getting in and out of the market. I think that is the most important part that I want to share with everyone.
I think one advice I can have for everyone is that for me personally, I would say I have a trading portfolio and then I also have an investing portfolio. So I'll separate the two so that you don't mix each other. Then whichever money that you are supposed to use for trading, let's say for income, whichever it is, then I'll keep that for the trading account. And then those with my longer term views, I'll just keep it for investing so that I won't, let's say, itchy hand and then I go and touch those longer
Mm,
term positions as well.
mm. Do you keep it in separate account, like separate brokerage?
Yeah, so I actually keep them in separate accounts as well. So I use IBKR for my longer term investing, and then I use Tiger for like my shorter term trading accounts.
Yeah, that's what I did do also for many many years because sometimes your longer term portfolio you every day see, right, you also
Then
achieve
you go and
take profit
yeah,
and things
yeah,
like that. So so yeah,
go and
so
make.
same thing. I have a longer term portfolio which I don't see so much. Okay, at least maybe once a week. But I have a shorter portfolio that I trade now. So I think
Correct.
it's uh, if you, it's not a must that you must have, but it's good to have different portfolio so that you have a clear view on what you want to do for that particular stocks also. Okay, let's go into the next topic about the markets. Okay, market has corrected a bit, and recently has recovered back. Okay, let's look at S&P 500. S&P 500 has went down over here, broke the trend line and then recovered back over here. So what is your view, Daryl?
Mm,
Ask your view
so
first.
earlier, like what I said with Nvidia also is like
Ah,
for everyone that is new, so stock market always moves in waves. So usually actually right now the entry will be better compared to 1 month ago because it's better to enter after a correction rather than always entering during the top, which is what a lot of newer traders, new investors like to do. But as of now, in terms of what I'm hearing macro-wise, things like it may be a bit chim for some. There's this thing called the U curve inverting, which is actually a recession indicator. So I'm more cautious on the side of the market right now in terms of the macro. But in terms of technicals wise, I would say it is quite bullish because we are entering after a correction. But something I'm looking out for is the 10 years, that 10-year and 2-year curve inverting, which usually results, or in a way it's a factor that usually after inverts sometimes or most of the time actually a recession will occur. So it's something that I'm keeping at the back of my mind.
Most people are fearful. Yeah. So one more thing to add. Technically, compared to same price from here, July, let's say 16th of July, and right now, I think the market is not as strong. That's my view. Market is not as strong as then. Why is it so? Number one, of course, everybody have their own view. Number one is we have broken a long-term trend line. Okay, so if you zoom out and see, this trend line has been broken over here. So that was the first thing. Okay, we've broken the long-term trend line. The second thing some people argue is like, but after correction, break the long-term trend line, it's recovered back above the trend line. Okay, however, if you notice that even when it recovered, it have not broken up new high yet. I don't know next few days, but I have not broken up new high yet. Okay, if you go to Trader GPS or any oscillator, you can see, let's say example, I use the COM, which is the accumulation momentum. At the same price, at the same price, S&P at the same price, the COM is lower. This tells me that internally right now, it is not as strong, even though we are back to the same price over here. I get what Gerald is saying, maybe a better entry compared to if you enter here is a better entry. But internally right now, this is not as strong as this, okay? Even if you use other indicators, let's say example, use let's say momentum indicators, right? Okay. The setting again, I might depend on the setting, how you set the parameters. Okay. Some of parameters you say, hey, the momentum is stronger, but if you set the standard setting, it may be also lower. Okay. So this is some things to think about. Okay. You can change the parameters to a longer term parameters, and then it may but also. Okay. Generally, accumulation momentum or a longer term indicator is about 3 months to about, I would say 3 months to about 9 months. Okay, that will be normally what time frame will be. Okay, and the traditional setting for momentum is 20. So if you look at 20, then you see that actually it is not making new high. Okay, so this is some of the things to watch out for. Okay, okay. Any other things to add, Gerald?
I would say that's all for now.
Okay.
So in terms of looking at the overall markets, I would say to be cautious, maybe not to be, although it's like what Colin said, we are nearing the all-time highs again. Okay, the momentum is slowing down and it's actually making lower highs in terms of momentum if you look at
Okay.
the chart.
Another thing to take note is if you compare the Nasdaq with the S&P 500, Nasdaq is more tech heavy. Okay, more tech heavy, more growth. Whereas the S&P 500 is more broad based. Okay, so if you notice that the S&P 500 compared to Nasdaq, Nasdaq have not even reached the resistance yet. Okay, you see over here, it's still below the resistance since the correction. It's still below about 6%, but whereas S&P 500 has already went almost at the resistance already. Okay, so you can see almost at the resistance. So what it tells me is now the rally is more broad based. Okay, so rather than focusing, which I mentioned in I think previous webinar, rather than focus on AI and very tech heavy, the market, the rally has spread out a bit more. So that is another thing
It's more
that
sustainable and it's actually better
more,
in the long run.
there's more spread out a bit more rather than focus on the tech stocks. Okay, so these are some of the things to take note. Okay, any other things to add?
So Colin, is there any ETFs or tickers that you ask investors look at or traders look at in terms of investing in the broader market? Because we have SPY and then we have QQQ. What is
Yeah.
the
So
ticker
SPY
for?
SPY is basically the um, SPY is the ETF for S&P 500. Okay, so this is the SPY ETF. Okay, so SPY is one. You can look at SPY if you like exposure to SPY, or VOO is another one. That's the Vanguard S&P 500. These are the two
Mhm.
ETF that you can look at that tracks the S&P 500. Okay, then in terms of Nasdaq will be like QQQ. That will be the more for Nasdaq
Tech
ETF.
related, right?
Yeah, and then there's the TQQQ, which is the leverage one. Okay, that's the leverage Nasdaq. Okay,
Mm.
so that is some ETF that you may want to look at
Would
also.
you
Okay,
also recommend, let's say, IWM? Let's say if they want to invest in the smaller companies, which is the Russell.
IWM. Okay, this is more the Russell 2000 is the
Mm. So it's a
more
broader
all the
market.
stocks.
Yeah,
Okay,
correct.
uh, look at the index. I would say, look at the index. How's the Russell performing compared to the S&P 500 compared to the Nasdaq, you know.
Mm.
So buy the strong one. Yeah. So if it's S&P
Okay.
500, Nasdaq, Russell, I think S&P 500 is the one that is doing well. So yeah, so that is the thing lah. Oh,
Okay. Okay. Mm.
okay. So any other things that by the way, if you have any question, can comment in the YouTube or whatever, then we can also uh,
See them and then address them from there as well.
look at them, and
Yeah.
then in the future we can also answer those questions also. Okay, so today we want to talk about a topic on underrated things about trading investing.
Mm.
Okay, this is our topic for today. What are the underrated things that we don't really
Mm.
talk about much, but actually are very important in trading or investing? Okay, Jerry, you understand? What's the first one for
Mm.
you?
So for me, I would say the underrated thing, I believe most people have heard about it, is that you should or you must actually manage your emotions whenever you trade or whenever you invest. Okay,
Mm,
especially in terms of when you should be fearful and then when you should be more greedy as well. So I think
mm,
personal
mm,
example for me would be that I have a friend. Okay,
mm,
so the good thing he did is that at least okay, no, not the good thing he did at the start, is that at the start when he started investing, so he put a lot of money into Tesla. So it's in terms of like maybe those kind of few hundred K. I would say
mm,
the thing or the good thing that he did when he bought Tesla is that although he did enter at the top or the peak of the markets, so his cost basis for Tesla at one point was about $400. So the good thing
mm,
he did is that because he managed his fear a lot, he managed his emotions a lot. So currently his cost basis for Tesla, okay, although he entered at the peak at 2021 with about 300K, right now his cost basis is only about $250. So what he did, he had a plan. So every 5% drop in Tesla, he would have bought more. So although it is still in a loss right now, so with Tesla being at 210, okay, he did make a profit last month when he went to 260. So he's been selling calls on his position, and then also I would say to bring down the cost basis from 400 or about 380 all the way down to about 250 is quite good because he did manage his fear in terms of that so that he can, have a better break even at the end of the day. So he just bought every single time Tesla dropped, let's say 5%. So in terms of that, he didn't get, fearful, even though his, stock price kept dropping. And then he also managed his greed in terms of he don't keep buying the same amount every time lah, when it was at its peak. So yeah.
mm, mm, mm. I think one of the things maybe averaging down,
Mm,
this is like averaging down is you must average down on the stock that don't go to zero. You know,
yeah,
if you
correct.
average a stock that go to zero, then no matter how much you average down, also
Correct.
may not work. So
Yeah, so
maybe one distinction about this is you need to ask is are you investing or are you
mm,
trading? If you're investing, then dollar cost averaging or averaging down may make sense because you buy more shares
Right.
and you do some fundamentals, you like the company, and you don't go in one time, you go in several times, and you have a system to accumulate the shares. Something that I do with sets,
Mm-mm.
ASATS,
Yeah.
those are more like investing. But if you're trading, if you're getting in and out of the market, you have a profit target, you should also have a stop loss. Then I will not encourage you to average down your trades. If you're trading, so really have to do your time frame also when you're approaching the market. What are you doing? Yeah, but I agree that managing emotions is one of the important part about investing or even trading. It's very important. So Gerald, what are the tools or thinking process that you do, or is there any thinking process that you do in terms of managing your greed and fear?
Mm. So usually for managing, let's say, fear and greed in trading, so usually is for most of us, I would say just follow your stop loss. So I don't know if you have this experience, Colin, is that in the past, I have did average down trades before, which in the end of the day, then I just resulted in a bigger loss lah, most of the
Okay.
time. So
Yeah.
nowadays, I don't do that already. So yeah,
Yeah.
so I believe with what you mentioned, in terms of averaging down for investing, that's okay, but you should never average down trades. If it's a trade that is going wrong and it reach your stop loss already, you should just straight away exit already in
Mm,
terms of
mm,
that.
mm, mm. Yeah. One of the things I don't know whether we're going to talk about it later is managing your emotion. Must understand that everyone has emotions.
Mm,
Whether you are 10 year or 20 years trader or you're like a newbie, you have emotions. So first thing is to recognize that everybody have emotions. The second thing is I feel is being detached to your traits. You know,
mm,
uh, so where are you focusing on? Where is your focus? Are you focusing on how much money I'm going to make or lose? Or am I focusing on being a good steward of my trades, being a good steward of my portfolio? So my suggestion is focus on being a good steward, managing your process, being a good steward, and rather than thinking about how much money you're going to make or lose. So objective of trading is not really to make money, but objective trading is really to become a good trader, because making money is just a process of becoming a good trader you know then the second one of the other things that we can do, besides just focusing on being a good steward, is also keeping a journal. Okay, keeping a
mm,
journal will really help you in reviewing yourself, because there's a saying, fish cannot see water. So sometimes you're in the trade too much, you become too greedy or too fearful, right, that you can't really see yourself. So by journaling down, by reviewing what you have done yesterday or last week, you become more aware of your traits. You become more detached from your process, or you're detached from what you're feeling right now. You are not fearful, but you are having the emotion of fear. So you must identify that between being I am fearful and I feeling the emotion of fear. So uh, because once you have awareness that you are having an emotion of fear, right, is something that you cannot control. Yes or no? Because something that you
mm,
cannot control when suddenly fear strike you. But when you recognize that you are having the feeling of fear, then you can say, yes, the fear come, but you can let it go. But if you say you are fearful, then you become the fear. You are too sucked into the game. Yeah, then they become dangerous for the trader.
I
Yeah.
think to add on to that, in terms of fear also, so for those who are having, let's say, a string of losses, I would say it's actually okay to always take a break. So the
Yeah.
same like, sometimes when some certain poker players are having their downswing, so what they'll do is they'll just take a break, okay, then
Yes.
clear their head, and then after the break, then they come back stronger, then go back to taking their trades and then following their trade plan. That may be better for some people as well. Because let's say
Definitely.
you're having a string of losses, sometimes it's actually very hard to manage those emotions that come along the way. So it's always okay to take a break in terms of trading as well.
Definitely. Yeah, taking a break is something that is important, and yeah, to know that life is not just about trading and making money, there are other things about
Mm.
making money. Okay, so your first one is emotions. Okay, my first one that I wanted to share is similar to emotions, but a lot of people focus on entry exit. But I feel that besides entry exit is managing your trades or money management, because the more money we trade, right, the more emotional we get. So my first one is money management, similar to your money management. Every time you risk a certain amount of money, uh, if you are too the amount become too big, then you become very emotional. But if your amount is too small, then it's negligible, you know. So you must find that sweet spot, right? That the trade is the loss is big enough. That means every risk that you take is big enough that is significant for your or makes sense for your portfolio. You don't just risk maybe you can risk 1%, 2% of portfolio, but must be significant portfolio. But at the same time, you're gonna be too big that it becomes too emotional. You know, so learn how to manage your per risk. What is your per risk that you're taking? You know, uh, and you need to balance between trading too small that your commission will eat up your trades, and trading too big and only you will know, because some people maybe $1,000 per trade is nothing, but some people $1,000 is a lot. You know, so you need to know where is that number that you become too emotional and stay below that number lah. Yeah, because
Yeah.
that's
So we
that's my
usually recommend to 1 to 5% of their portfolio, right?
uh
In terms of
but frankly, this is a guideline. 2%, 1%, 5% is a guideline, but really it depends on people to people. You know, because some people they can just be they're comfortable with risk, but some people are not comfortable with risk. I'll say a guideline between 1 to 5%. You know, that's a guideline. But there are people that can lose 5% and still okay. You know, there's people who 1% and cannot sleep. You know, so
yeah.
really depends on what is who are you lah? Okay, which is actually lead to my next one. Okay, uh, which is next one is knowing yourself. Knowing yourself. So one of the things about people ask me is call it how to make money. You know, how to make the most money in the shortest possible time. I think the question is asked wrongly. First thing first, you need to know who are you. Are you an investor? Are you a trader? Are you a long-term investor, short-term trader? Who are you? You need to know what you are most comfortable with, which part of the playground do you want to play, and don't just go to the playground that is the most have the most activities. It may not be the best for you. So know where is your playground and know yourself. That's my second one. Okay, beside money management, my second one is knowing yourself. How about yours? What is your second one?
So for my second one, it's more in terms of a general tip line or a guideline. It's more in terms of cost effective investing. So
Okay.
in terms of cost effective investing, let's say 0.15% fee versus a 2% fee.
Yeah.
So the reason why actually a lot of people go against ILPs, or in a way, how do I put it? I recommend against ILPs is because of that 1-2% fee that actually adds up in the
Yeah.
long run. Yeah.
Correct.
So to just give an example, for those that don't know, so I give an example is that if you started off with 100K, okay, if you invested into the stock market yourself with a 0.15% fee, okay, usually your fees will be, let's say, around 35,000. Okay, your portfolio will grow from 100K to, let's say, 700K over 30 years. And then the fees paid will be around 5% of the portfolio only. But if you use, let's say, a higher fee, let's say 1 or 2%, so you will have the same $100,000 investment. So over 30 years, actually for the 1%, okay, it will take up about 25% of your total portfolio value, which is about 140,000. And then for 2%, actually you'll take up almost maybe about 50% of final portfolio value because of that 2% or that 1% compounded over 30 years. So
Mm,
for those
mm.
that actually think that the fees, 1-2% versus 0.15% is only 1%, right? But actually over 30 years, because of compound interest, okay, it will add up to a very, very big sum. So it's something to take a look at or take note at Okay, even for those that just want to invest, there's a reason why we recommend those in a way those funds with the lowest fees. Okay, usually the lowest fees funds has less than 0.5% or 0.3%. So it's actually better to do it yourself.
Mm,
Okay, although ILPs or let's say in certain investment plans make it easier for you. Okay, the fees is
mm,
actually very, very important in terms of the
mm,
returns as well.
mm, mm. So just to recap again, when the fees is at 1%,
Mm.
you know, then it will take up 25% of your
The
returns.
final portfolio value, correct.
Okay, do you have the number for the final portfolio value?
So for 1%, the
Ah,
final portfolio value will be about 574K
okay, okay.
with a
Compared
1%
to
fee.
700,000.
Correct.
Wow, that's a lot.
Yeah. Then if it's
Okay,
2%, it will take up almost half, which is about
wow. And your returns will
250,000.
be?
And then the returns will be only about 400,000. So
Wow,
instead of
okay, a lot lah.
700,000, you can only get
50% of your
yeah.
returns, okay, because it's
Correct.
a 2% fee. Yeah, similarly myself, I don't really invest in REITs lah, unit trusts, mutual funds, all this,
Mm,
learn to do it yourself, okay.
yeah.
I think that's the thing. Fees, or working with financial advisors, sometimes the fees really, really eat up your portfolio, but a lot of you are not aware lah. Yeah. So what's your third one? Do you have a third one?
So third one is also on terms of, in a way, a bit of compound interest. So I
Okay.
believe everyone has also heard of this before, where it's actually very, very important to start early. Okay, but maybe
Okay.
not everyone has heard the story on it, or in a way, the reasoning behind it. So personally, for me, actually, once I heard about it, actually, I got very obsessed with finance, and then personally, I started investing since I was 16 years old. Okay, so to just give an example, okay, for someone that starts investing at 18-year old, okay, let's say he invests 1,000 a month, okay, which is quite okay for everyone, I would say. Then you earn 6% annually. Okay, by the time so by the time this 18-year-old reaches $65, 65 years
65
old,
years old.
he will have accumulated approximately $3 million already. Okay, but he could also stop at age 33, so he only needs to invest for about 15 years, I believe. Okay,
Yeah.
18, yeah, so 15
Around.
years.
Yeah.
Okay, versus let's say someone who starts at 30 years old, okay, and then he invests double the amount. Okay, so he invests 2,000 instead of 1,000. Okay, so by 65, this same person will only have 1.9 million. So yeah.
Mm.
So in
Mm.
terms of compound interest, it is
Mm.
always very, very good to start early.
Yeah.
So for the second guy, he has to invest more to catch up, and he also has to invest for a longer period of time.
Correct. Yeah. Yeah. I totally agree. Many years ago, I started my dollar cost averaging program. For those people who are parents, it's good to start, besides doing your insurance plan. I think more importantly is to invest for your children. Set aside a dollar cost averaging plan for your children, a few $100 or $1,000, and then start young. Just put aside. Over the last 50 years, the S&P returns is about 10%. Okay,
Mm,
so
correct.
if you just put it in every month for them, and then after that they continue putting themselves, you will reap the reward later lah. So it's really true. Start young. Okay,
Yeah.
start young.
So cause there are I have more friends my age where let's say they only tell me they have $100 to invest, $500 to invest, $200 to invest. Actually, you should actually, even if you have that let's say small amount, let's say that smaller amount of 100, 200, 500, even my advice would be just to put it into the stock market. Just start early because it will just grow over time. So yeah. So
Yes.
personally, like one example or one story of mine was that since I started at 16, right? So by 18, okay, although it's not a very big sum, actually because of that 2 years of constant investing or saving, so pretty much by 18, I had about close to high five figures in my bank account already. And that was just from, let's say, $100, $200 of investing every single month.
Yeah. Fantastic. You are a very good example for young people. Okay, even my son is like look up to you. Wow, Coco Gerald is very good. Okay, so for my last thing is for trading investing is knowing your time frame. Okay, this took me quite a number of years to realize, besides knowing yourself, is knowing your time frame, what time frame are you in? Okay. It will, and a lot of people like to FOMO, like, hey, now this guy is trading and making so much money, or this guy investing and making so much money. Don't FOMO. Find out who are you and know your time frame. Are you in for the short haul, short term? Are you in for a long haul? What are you in for? So a lot of people focus on entry, exit, things like that, but don't really know your time frame. So and have a strategy based on your time frame. I believe that strategy is not the most difficult thing. The most difficult thing is like what we mentioned just now, like emotion, money management. These are the things that are very important, but really a lot of people don't talk about it so much, because it's just like not so sexy.
Interesting, not so
Yeah.
exciting.
Yeah, not
Yeah.
exciting. Like, for example, we do a training on trading psychology, or do a training on what's that called? Knowing yourself. I think not much people turn up. Yeah, but we
Mm.
talk about entry exit, and everybody would be very excited. Yeah, of the markets. Okay, so let's summarize again. My three was money management, time frame, and knowing
Knowing
yourself. A
yourself.
little bit of like talking about managing your emotions. And Gerald, your three will be.
Mine will be emotions,
Yeah,
managing your fear and greed.
yeah.
So cost-effective investing and trading,
Mm,
and then the importance of compound interest slash
mm.
starting early or even starting small. That's fine
Okay,
also.
correct, correct. Okay, we got some more time. Maybe we can lastly talk about stocks. Okay, what are the things you are, again, whatever I share with you today is for education purpose, not advised to buy and sell. I hope disclaimer is somewhere there. Any stocks that you are looking at, we can define that investing and trading. Okay, let's talk
So
about investing first. If you have any stocks that you're looking at.
in terms of investing, for me, my personal favorite, it was people's favorite in the past would be Tesla.
Okay,
Because right now, I believe actually Tesla also has become profitable already.
yeah,
And then in terms of the future outlook, something I'm looking at will be the automation or it being in terms of maybe the robo taxis taking over the world. That's something I'm looking at as well. Or I'm more
okay.
bullish on.
Yeah, I personally also like Tesla. We just share the screen, Tesla.
Mm.
Yeah, so this is the screen on Tesla. If you're doing long term, then go to weekly chart. Okay, then this is the weekly chart. I think don't need the rest of the thing. So if you can see, Tesla is really at a low price lah. I mean, if you talk about long term trend, right, this is like the low part of the trend. Also around here lah. Yeah. So one of the stocks that I was looking at, which is my student that mean told me when I Nike. Okay, Nike has been down. Okay, if you
Mm.
look at the price, Nike is down. News not very good lah. The news has been bad, But in terms of value, I think right now this giant has reached a value price. Has reached a price that is very attractive lah. Uh, usually when you do this kind of investing, I don't read news at all because news a lot of times will be bad, Yeah. So I think right now Nike is something that you may want to look at in terms of investing longer term. Okay, invest in good stocks. Okay, so that is for my stocks. Any other stocks for investing?
In terms of investing, I think right for me, I only has been looking at Tesla. I have only been looking at Tesla. So
Okay,
that's one.
okay, okay. Uh, for me, I think most of the stocks are student tell me one. Okay, another one
Mm-hmm.
is Lulu. Okay, Lulu also around that same price. Also, okay, around the same price. It's reached to that value of like value. Okay, but compared to Nike and Lulu, I prefer Nike lah. So there is some context. And another one is 10 cents. Okay, 10 cents. If you look at 10 cents, not too bad also. If you look at it, uh, yeah, it's around here lah. Okay, right now. Okay, if you look at the long term, it's no longer, it's not at the high part of the channel, which is expensive. It's more at the lower part of the channel lah. Okay, or below 50% lah. Okay, so that is something that you may want to look at also. That's for investing. Okay, we have how many? Four already. Okay, so let's talk about trading. Any stocks that you are looking at for trading? Because trading must be
So
stocks that are more like in trend right now.
mm,
Ah,
trading wise, actually, for those looking at doing swing trades, actually the swing weekly for
mm,
Trader GPS, the two stocks I've been looking at actually is MicroStrategy and Coinbase. So both of them are actually showing
mm,
valid swing setups. And for those that want to get exposed to the crypto side of things, or in a way, crypto asset class, without needing the how to say the difficulties of, let's say, buying the wallet, setting up the wallet,
mm, mm, mm,
changing your SGD to
mm,
Ethereum or Bitcoin.
mm,
Actually,
mm,
you can do it via these how to say crypto related stocks, let's say
mm,
through MicroStrategy or Coinbase,
mm,
or
mm,
even the
mm.
ETS itself. But in
Okay.
terms of ETS, I would say there's no setup right now. So I'm
Mm,
looking
mm.
at setups for MicroStrategy and Coinbase as well.
Okay, so MicroStrategy is a swing trade setup, but in the trade already lah. So I
Mm,
think we are maybe 2 or 3 weeks into the trade already. This was the setup day, setup week, and then right now we are like on the third week of the setup already. It means it's a short-term trade. It's like a 1 month trade kind of
correct.
thing. Yeah. So the other one is
Maximum about 5 days.
Coinbase. I think Coinbase looks similar to
Yeah,
that.
but
Okay,
for
so
Coinbase in terms of yeah, so it looks similar as well.
okay, looks similar lah. Okay, but weaker than MicroStrategy lah. But that
Correct.
was for swing trade, 1 month trade. Other trades I was just scanning this week. We have this week we have Honeywell. Let's take a look. Honeywell also in the trade already, so already 2 or 3 weeks into the trade already. Same thing. Okay, this one is 2 or 3 weeks in the trade already. So most of them are 2 to 3 weeks into the trade already. So maybe this week, if you trade, may not be that good, you know. How about longer term? Not 1 month. Longer term, do you have any stocks that you are looking at?
Longer term wise, I think as of now, I don't really have
Okay,
for trading at least. It
okay,
is more than 1 month.
okay. Can. Some of the stocks that we are looking at for myself, Starbucks. Okay, Starbucks. There's a signal. Okay, for Starbucks. All this on the top lah. Okay, generally on the top lah. These are some of the common stocks that we are looking at. Starbucks is one of them. Trader GPS signal. Okay. This is actually the second signal. So after this first signal, right now is the second signal right now. Okay. First for 3 months straight. Okay. And then this one has ran up quite a bit already. So this is chartered communication has went up quite a bit already. Yeah. So these are some of the longer term trades also. Okay. Not much things in terms of 3 months also. Right now market is still finding its footing, I would say. Yeah.
Yeah,
I
it's
think
like in the middle. Not sure if it wants to
finding
go up, not
not
sure if it
very
wants to go
sure
down.
right now. So that is the outlook for the thing. Okay, more for investing. I think for trading, maybe lesser right now. Another
Correct.
thing to take note of, if you scan, there are quite a lot of healthcare right now. Okay, this stock has been, I've seen this stock before a few times. ISRG, these are longer term trade also for trading long term. Okay. Okay, again, whatever I shared with you all today is for education purpose, not advice to buy and sell. I think let's call it a day today. Been a good session.
Mm,
In the future, we will maybe have this kind of format. We will start with some kind of review of the stocks that we talk about. Okay, and then after that, we will go through a little bit of the market outlook, like what's happening in the market right now, and then last part we will talk about some trading topics, okay, some trading topics, okay. And if time, maybe we can look for stocks to trade for the following month also. Okay, if not, then thank you very much, guys. Thanks for joining us in this podcast today. See you in the next podcast.
bye bye.
Bye.